Today, I'm going to be talking about how you can increase your trading win rate with this tool that I made. Now, I call this the ADR calculator. Now, ADR stands for average daily range. A couple things I want to mention right off the bat. Unfortunately, this is only for traders that are using the Thinkorswim platform, which is what I'm using today. Secondly, this only works, when trading on the 4-hour time frame, 4 hours over the last 180 days. So the 4-hour 180 day. Make sure you have this time frame pulled up, 180 day, 4 hour. That's the only way this is going to be accurate. All right, with that said, why will this ADR calculator help you increase your trading win rate? Now, I've been trading for many years, and one of the things that I realized right off the bat, not just in my trading, but when working with students, is that what tends to happen is that we set these targets, whether those are our take profit levels or our stop loss levels, right? Whether we are long or short, doesn't matter, but we're setting these levels based off of something we see on a chart, Whether that is a moving average or a support and resistance level, a key level, maybe you're just looking at the candlesticks and you're setting that target that you're looking to hit or looking, at that point to get out of the trade, right? Based off of that trade specifically. The problem is traders, including myself in the beginning when I didn't have this tool, we tend to set unrealistic targets. Now I'm going to explain what I mean by that. So here's a little summary. Using the average daily percentage movement and its projections, you can gain insights into the historical volatility of a stock. So this information can essentially be valuable for setting realistic stop loss and take profit levels based on recent price action. So average daily range, ADR, that is this tool right here, that I've plugged into my Thinkorswim. It is the average daily percentage movement, which will give you an idea of how much the price typically moves in a day of that specific stock you're looking at over the last 180 days on the 4-hour time frame. This information can be used to decide whether your stop loss or take profit will actually be hit within your optimal trade hold period, mine being 3 to 5 days. So up here you can see over the last 180 days, the stock specifically that I'm on is ticker symbol CRM. So over the last 180 days, CRM has on average moved 0.85% a day. Now that's not up, that's not down. That is just taking into account the daily high and the daily low on the 4-hour over the last 180 days. So between the lowest price of the day and the highest price of the day, on average, CRM specifically is moving less than 1%. Now, when it comes to setting those realistic targets, I'm going to give you an example. So if let's just say this is just a theoretical trade, right? And don't even look at the chart. Let's say your take profit sits 8% away, and your average hold period is between 3 to 5 days. Yet the stock you're looking at only moves on average 0.50% or 0.5% per day, right? Which we'll be able to see based off of the white box right here, So say that stock you're going to trade, it only moves 0.5% a day, yet you set your take profit 8% away, which means, looking at the chart, that stock has not moved 8% in 2 weeks. Well, then you shouldn't be taking that trade, because you're not going to hit that target within your optimal hold period. And part of trading is setting realistic stop loss and take profits. That's vital into your success because we need to run the risk to reward beforehand, based off our stop loss and take profit. And then we can simulate the expected returns around our average hold period and figure out if that's a trade we should take in the first place or not, So by using the ADR calculator correctly, you should start hitting your targets and see an increase in win rate. I'm going to give you some examples. If this doesn't make sense, don't worry. Now, because my optimal hold period, that means when I'm entering a position to when I'm selling that position is in between 3 to 5 days, and the longest I'm going to end up holding a position is going to be 5 days, then I want to set, when I go to simulate that trade out, the furthest, the furthest out I'd end up holding a position. Okay, that is going to be essentially the worst risk to reward. So on the first day, say the next morning, if I hit my stop loss or take profit, I will be presented with the best risk to reward. But as the days go on, as we trade options, well, theta kicks in and it costs us more and more each day to, well, hold that position. Okay, so that's why I'm going to go 5 days out when I go to run that trade to simulate out that position using the Analyze tab. Okay. All right, so like I said, I'm going to give you a couple examples, but I wanted to show you real quick. If you go up to the gear icon, go up to the studies icon, you can see here, we've obviously got our studies applied, our SMAs, our EMAs, and you can see here the daily traders ADR calculator. Okay, now, once you've installed the calculator, there'll be a link below this video. All you have to do is click on that link. It'll take you to a website. It'll be Thinkorswim's website. You just click import, and then it'll load, and it'll be in your Thinkorswim. So it'll be under studies. So you'll be able to look up the daily traders ADR calculator. If it doesn't automatically apply to your chart, it'll pop up. Click on the gear icon. Now, the length has to stay at 180 days. Okay. It doesn't have to, actually. I like keeping it at 180 days because that gives me like the most accurate representation. But if you do your work on another time frame, or not time frame, you got to stay on the 4 hour, but you could go 60 days, right? Okay, you can hit apply. But it's not going to change a whole lot, right? Maybe say in the last 2 weeks, the stock's been super volatile. Maybe there was earnings, just some abnormality, okay? We can change that length. Oops. Okay, I changed the wrong thing. That's funny. I changed my EMA. It has to be 180 day. Okay. Length, let's say 60. Okay. Apply. Okay, 0.87. So it's virtually the same. So I would just recommend, even though you have the flexibility to change it, I would recommend staying on the 180 day. Again, it's just a larger time frame. But we can look at, like, say, the last 10 days. Okay, our average daily range over the last 10 days is 0.96. Okay, but that's up to you. I'm just saying the way I use it, it's looking over the last 180 days. Okay, half a year worth of data. And then this is a user-defined day. So because my average hold period is between 3 to 5 days, I'm going to go the furthest out when it comes to simulating that position, running that risk to reward. Say your average hold period is 3 days. You can hit 3. Say it's 10 days. We'll hit 10, click OK, click Apply, and OK. Now, up here, the 10-day projected movement is 8.48%. You can see how that changes. Back to studies. Let's just switch it back to 5. Let's just use 5 days. Okay, 5 days. Apply. Okay. Now, let's go choose a stock. Let's say we are just, this is totally a theoretical trade, okay? We are going to trade ticker symbol CSX. Let's say our take profit is going to be at 35.83. Our stop loss is going to be at 37.37. We're looking to see a pullback to the 50-day SMA. Now we can look at the average daily range on CSX over the last 180 days is 0.76%. Now the 5-day projected move is 3.7%. That means that our take profit and our stop loss have to be within 3.78%. Okay, I guess it can be a little over, right? But if it's like 5, 7, whatever, 10%, that's the, our stop loss. So when you go to drawings and you click on the drawing tool, the timeline, and you drag this from where we're currently trading, which is around that 37 area, up to our stop loss. All right, 0.70, we're within that 5-day projected movement. And then let's look at our target. Okay, 3.3, we are in our 5-day projected movement. That means now, obviously, we can go punch in 35.83 in the Analyze tab to run the risk to reward, and 37.37, knowing that that is a realistic target to hit within, 5 days, our projected move. So that is how your win rate will increase. Now, let's say, for example, you set your take profit down here at the 180 day. And we can see, based off of this stock, right, that the average or the 5-day projected is going to be 3.78. Well, if we drag down to this level, we're sitting 7.4% away. Okay, our target's 7% away. Now, are we going to hit that target realistically within 5 days? No. Now, on the other hand, maybe your average hold period, the longest end of that is 15 days. If that's the case, well, now it looks like you could take that trade, right? So, a couple of things you should, understand is that you need to have this data tracked. You need to know what your average hold period actually is. Okay, whether that's 1 to 2 days. This only works from a swing trading perspective, okay? But 3 to 5 days, 7 to 8 days, whatever the case may be. And so you could start setting those realistic targets. Let's give you guys another example or two. Let's find a different looking chart here. Let's find something a little more clean. I don't know why that keeps popping up. Okay. Nah, that's not a great example. Let's find something. Okay, please stop popping up. Let's see. Let's go for, I'm trying to find one of our setups here. Let's see. I like this one. Okay, so let's say we're just going to look to capitalize on a pullback. This is just a theoretical trade. Back down to that low. We're going to set our stop loss at the 50-day. Okay, just theoretical. Now, if we look at this stock specifically, BKR, average daily range is 1.17%. Our 5-day projected movement is 5.85%. Okay, so from where we're currently trading, let's calculate the margin for profit down to our take profit, just about 8%. So that would not be a realistic target to hit within those 5 days, which means that trade we would end up holding more than likely beyond those 5 days, where at that point we haven't accounted for that risk to reward as the days progress, as that position gets more expensive to hold. Now you could be in that trade for a week and you're not going to hit your target. You're going to have to get out. There's going to be a decrease in win rate. So if you can set realistic targets by using this ADR calculator, it is almost inevitable, not guaranteed, but almost inevitable that your win rate will increase. Now, obviously, our stop loss is good, okay? Let's give you guys one more example, okay? And then you can start using this yourself, start seeing an increase in that win rate. Super theoretical, let's say that low at 175.01 is our stop loss. And our take profit, let's say, is up here at the 196.60 area. Okay. Now, currently trading at around 189.30. Stop loss is setting 7.6% below. Good. Okay, we're within that 8.02%, the 5-day projected move. And our take profit is within 8% as well, 3.7%. Realistic targets. We're either going to hit that stop loss or take profit right to the most of our knowledge using this tool. This is theoretical. But looking at historical data, using that as a projection into the future, we can assume that we'll hit that stop loss or take profit within, in our case, that 5 days, right? Or in my case. Okay, so again, just, if you guys want to take down a couple notes, I'll just pull back up CRM where I had my notes. If you guys want to write this down, I think at this point it should be pretty straightforward. Again, you just click the link below. It'll take you over to a website. It'll be like Thinkorswim. You just hit apply. It'll load that tool into your TOS account. And then again, under studies, the Daily Traders ADR calculator, click on that, click on add selected. I'll show you guys how I have it applied because it looks nice and pretty and it won't look like this right away for you. So let's see. Okay. Gonna look it up here. Click on the Daily Traders ADR calculator, add selected. Now, click this arrow because if I apply, you'll see, there we go. Now, if it was like this, when you applied it, it would look like that. So we don't want it to look like that. So you gotta click this arrow, move it up. Now it should have that sign, okay? You can move it up again, totally doesn't matter. Click apply. So now it's here. Okay, now it's got this annoying border. Okay, let's change that. So let's go back to here. Let's go to Daily Traders ADR Calc. Let's click on Settings. And then Left Access, we're going to uncheck. And again, this is the length. I recommend keeping it at 180. Again, this has to be used on the 4-hour time frame. 180 days is going to be going to give you the most accurate representation of that average daily range and the projected move. This is your optimal or average hold period and the longest end of that. Okay, so on average, you're holding a trade 6 days. So 6 days. Okay, apply. Okay, there you go. That is the ADR calculator. I'm constantly working on building out new tools and ways to help you guys not only find that consistent profitability within the stock market, but squeeze the most you can out of your trading system. So from a win rate perspective, this should really help you guys out. Hope you guys enjoyed. Okay, see you in the next lesson.